Good morning, Paul Georgie from Allendale. It's May 29th, Wednesday morning, and grain markets backing off just a little bit here this morning in soybeans, corn now firmer in the December with the July up just slightly. But the main focus of the trade here is the planting progress. We got that yesterday from USDA, 86% corn planted. That was right what the trade was expecting. 90% is average. So we are catching up there, but we still have about 13.6 million acres of corn to plant. And the prevent planting dates is getting very close here in many areas. The May 31st is a key date, and then June 5th through the 7th is key date. Further south we go. So those are items that are being talked about by the trade, that because of the rain that we've got this week and the heavy amounts of rain across the central part of the Midwest is getting traders very excited about the prevent planting process and probabilities. But we've done some work in-house here and suggesting that we could have 2 to 3 million acres of corn in the prevent plant program. That really doesn't impact the bottom line when you look at total production. Even if you shave a few more bushels off a yield, take out the prevent plant numbers, you're still looking at a possible doubling of the ending stocks for corn next year. So the main focus on corn will be harvested acres and yield. When it gets into August, September, expect some pretty volatile times as we talk about weather situations at that time. In the soybeans, 44% planted. Trade was looking for about 42%. We're about 20% behind on the soybean planting, and I think the soybeans very critical situation here with the amount of moisture that we have, potential late plantings, the concern about yield in soybeans could have a huge impact on the ending stocks there. And following a year with extremely tight ending stocks as we have right now, traders are going to be keyed in on that as we go through the growing season. The 6 to 10 day forecast, a little bit drier the way we look at it, but we still have got several days of potential heavy rains across the Midwest, and don't expect to see much planting done this week. Technically, these markets are overbought. We should have good resistance in Dees corn initially at 560, then better resistance at the 570 area. In soybeans, the $13 area in November beans is going to be watched very closely here. A close above that could give us the momentum to go higher up to the 13.5 area. The other fact that we've got to be aware of here this week, we've got the beginning of some major funds rolling positions out of the July contracts. We're seeing spread adjustments there yesterday, and possibly some front running in front of the potential of the Rogers Fund, Deutsche Bank, Goldman. Some major rolls are going to take place over the next 5 to 10 sessions, and that could cause some spread adjusting here and some support to the deferred contracts, as many of these contracts will be rolled out of the July into the December and into the November soybeans. So stay in touch with Allendale. We'll keep you informed there. The livestock trade cutout values were off a little further yesterday in choice, down 33, select down 51, pork cutouts down 55. The demand and movement here over the weekend doesn't look like it was exciting as the trade was hoping for. We need to get some further clearance at the retail counter, and the weather conditions that we've seen in metropolitan areas certainly has not been conducive to cookouts and use of the higher price cuts, and that's resistance here in this in the cutout values and the demand side of the equation. There hasn't been any cattle traded yet this week. We're watching that very closely. Stay in touch with Allendale. We'll get that information to you as quick as we find out. You can reach us at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning.